Hello friends, my name is Masood. Today we shall discuss about topic regulatory landscape for digital banking. Friend, today's topic is very interesting, especially if you have an interest in digital banking and regulatory authorities and you want to learn about it. So let's start, friend. Friend, digital banking is nowadays very common thing. Like many people nowadays are using mobile applications, online banking, ATMs, uh, POS applications for to perform transactions, and digital banking has evolved a lot if we compare it with the traditional banking, in which we have to go on the we have to visit the branch, we have to open the account, and then we have to wait in hours and hours in the line to get the cash from the cashier. So now the banking is totally changing, and the era is now entering into the digital format, and things are lots have been changed now. When things are changing, there are other concerns, and other issues are also coming related to digital banking. So to regularize the things, just to control and control the things, every country has a regulatory authority for digital banking. So that means basically banks are handling or managing the digital things, digital transactions and digital formats. But there are some regulatory authorities as well who are basically regularizing or controlling the digital banking. So first thing is the licensing and authorization. Friend, digital banks are typically required to obtain specific licenses or authorizations from regulatory authorities to operate legally. The licensing process often involves a thorough assessment of the bank financial stability, operational capabilities, and compliance with regulatory standards. Here, friend, we know, friend, like whenever we are performing transactions, so we have to enter a pin, okay, personal identification number, to perform a transaction. So a friend, to control to manage the pin or to authorize the pin, so there are certifications involved to handle the customer data, to customer information, customer personal information, transaction data. So many there are certifications and licenses are there which bank must have to perform. Let me give an example. For example, you perform a credit card transaction on a POS application, for example. So there are certification involved related to Visa, Mastercard, uh, like Union Pay, etc. So banks, this is the thing that must have to follow all the licensing and the authorizing things. Then consumer protection means regulations aims to protect customers using digital banking services. This includes ensuring transparency in terms of fees, providing clear terms and conditions, and safeguarding customer data and privacy. So that means basically, friend, this is the case that whatever the fees is deducting, for example, you are requesting for a debit card, so the debit card fees will be deducted from your account. So it should be transparent, it should be as per the terms and condition, and there should not be any hidden charges. It must have to be ensured by the bank. Then money laundering, AML, and know your customer, KYC compliance. Digital banks, like traditional banks, may comply with AML and KYC regulations to prevent money laundering, terrorist financing, and other financial crimes. This involved verifying the identity of customers and monitoring transactions for suspicious activities. Like banks must have to ensure that whatever the transactions are going on, they should not involve any anti money laundering case, or any terrorist financing. So banks must have to be ensure about it, and there should not be any financial crime should not be occur, and the customer data should be properly identified and properly monitored, and if there are any fraudulent activity, it should have to be handled proactively. Then data security and privacy means regulations mandate that digital banks implement robust security measures to protect customer data, Compliance often involves adhering to data protection laws and regulations specific to the jurisdiction as well. So, customer data must be completely secure, and because it's a private thing like name, address, phone number, mobile number. So, all those things are private things and it should be properly secured and privately handled. Cybersecurity standards means regulatory bodies set cybersecurity standards to ensure that digital banks have effective measures in place to protect against cyber threats and attacks. This includes regular audits and assessments of cybersecurity infrastructure. Here, remember, friend, one thing, that as the banking is evolving and digitally they are moving towards a digital era, so now the cyber security has also become so much important in the industry, and many companies, many banking industries, banking sectors are now moving towards cyber security standards and softwares. And cyber security infrastructure, they are evolving, they are basically identifying the requirements and implementing as well. Then cross-border transactions means regulations address the complexities of cross-border transactions, governing how digital banks can operate internationally. Compliance may involve adherence to international standards and collaboration with regulatory authorities in different jurisdictions. Means, friend, for example, you are sitting in Pakistan or India and you want to perform a transaction in the USA, for example, or from USA you want to send money in Pakistan or India. So this is an example of cross-border transactions, because banks are involved in these types of transaction, like bank from USA will involve, a bank from India or Pakistan will involve. So there are some complexities which must have to be handled and addressed properly. Then capital adequacy and prudential standards means digital banks, like traditional banks, are subject to capital adequacy requirements and prudential standards to ensure their financial stability. Regulatory bodies set minimum capital ratios to safeguard against insolvency. Then innovation and fintech sandboxes means some jurisdictions establish regulatory sandboxes to encourage innovation in digital banking and fintech industry. These sandboxes allow companies to test new technologies and business model in a controlled regulatory environment. So when we talk about sandboxes, friend, basically just think of this as a test environment. Before going on production, you can test the things in a sandbox. Then payment services regulations means regulations specific to digital payments may govern the operations of digital banks that offer payment services. Compliance may involve adherence to standards such as the Payment Services Directive PSD2 in the European Union. Compliance reporting and audits means digital banks are often required to submit regular compliance report to regular authorities.